Selling all of your stocks in the midst of a potential recession can be one of the worst moves you could ever make. With the troubling months potentially ahead, this seems like it's the right move. But in reality, trying to time the market can absolutely decimate your returns over a lifetime. And I'll tell you why. Hi, I'm Seth with Everything Money. I bring your questions to a couple guys that have over $100 million in assets, including massive invested portfolios, hundreds of units of real estate, and multiple businesses. I've also learned from and studied some of the greatest investors in the world. And they almost all agree that trying to time the market, trying to sell your stocks when the market's crashing, then buying them back when it gets exciting again, is one of the worst mistakes you can make. The stock market is almost impossible to predict. Even the best investors like Warren Buffett and Charlie Munger have no clue what it's going to do tomorrow. And these guys invest billions of dollars on a weekly basis. Famous investor Peter Lynch has said, far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. So please get out of your head that you can successfully buy and sell at the right time.
You underestimate my power. Don't try it.
It's a proven fact that you cannot predict this. I literally have these same conversations with people all the time. Someone will bring up the current market conditions. We chat about how the market's looking pretty bleak. Then they just casually say they're gonna sell all their stocks. Meanwhile, I'm quietly nodding along, but I'm dying inside.
I am dead inside.
This is the frustrating thing about investing. Pretty much everything that everyone's told you your whole life has been wrong.
Knew it!
People who have absolutely no idea what they're talking about, including financial advisors, love pretending that they do.
Who's pretending?
Your job is to make a very few disciplined and careful decisions with your money. This involves holding stocks when all the dummies are selling, staying out of risky speculative plays, and generally not doing what your uncle tells you to. If you accomplish all of this, your portfolio can be worth millions more than all the nudniks around you. A declining market can spark a lot of fear. And it's human nature to be afraid of things. Like if an enormous lion's coming towards you, you run to live another day. But this is different in investing. The biggest risk is missing out. If you sell all of your stocks, you will miss out on all of the market's biggest gains.
Those who stayed in saw their holdings double over the next year.
The largest downfalls in the market over a past century have been followed by the greatest gains. So by smartly selling your stocks, you are stupidly gonna miss out on the biggest gains. And the results are staggering. Take a look at this chart from Merrill Lynch. It shows that if you had invested $1,000 at the beginning of each new decade, what that $1,000 would have eventually turned into, especially if you took one of these three actions. Number one, you invested it and left it alone. Number two, you tried to time the market, sold your stocks when they were going down, and thus missed out on the 10 biggest run-ups that followed. And three, if you were really savvy and you sold like 20 times, you're basically jumping in and out of the market like a bandwagon Yankee fan.
2-0. Swung on, there it goes.
In every case, you would have lost out on enormous gains. And check the internet, there are hundreds of examples of this. I love the first decade. If you tried to time the market the most, your $1,000 turned into a little over $3,800. But if you just simply stayed in, set it and forget it, you'd have over 21 grand. Christopher Davis, an avid investor and the director of Coca-Cola, once said, though tempting, trying to time the market is a loser's game. $10,000 continuously invested in the market over the past 20 years grew to over 48,000. If you missed just the best 30 days, your investment was reduced to only 9,900. And I know what you're thinking, if the future looks so terrible, why not just sell it all?
Sell it all today.
Flip all my money to cash and not lose any of it. Problem is that thought process can turn into a habit when you end up buying and selling at the complete wrong times. And this is really strange. Investing and buying homes are the only two times in the world where people like you and me love paying more for stuff. So get this, we clip coupons, we haggle on deals, and we kill each other on Black Friday to get an extra 10 or 25% off the goods and services we use during our days. People will brag for a decade on how they saved $500 when buying their car.
Oh, good for you!
But when it comes to buying stocks or that new house, the vast majority of people only get interested when pricing goes up.
That doesn't make sense.
There's this weird inner feeling that I have to get in on the action. We see the pricing starting to explode and we don't want to miss out. And I have fallen victim to this as well. I'm an avid Magic the Gathering collector, and I have been for like 20 years. And like the market over the past 2 years, the value of these cards have exploded. And sure enough, I jumped right in line with all the other idiots and started buying at this inflated rate, thinking that none of these new prices were ever gonna go down, and that this would be the new baseline for valuations moving forward. And now that the value of all these cards have gone down 20, 30%, like everything else in the world, I'm not selling my collection to cut losses. Rather, I'm holding on to them because, like the market, I'm expecting them to be higher in the future. Every time you panic sell to avoid a market drop, you're missing out on these great gains that follow. And you might know very successful people in your life who are investors and business owners, and they might seem quite wealthy, but I'm guessing they've tried to sell their stocks at the wrong time and have most likely missed out on millions of dollars in returns. And everything I'm saying is not my opinion. This is precisely how all of the greatest investors in the world think.
And never be in or out of the market. Always be in at a certain level, you may want to be 50% in the stocks like I am. You may want to be 75% or 25%. That's probably a decent range, but never be out and think you can get back in, because your emotions will defeat you totally.
Invest as heavily as you can and keep it that way. In the long run, it's going to go up 6, 7, 8, maybe 9%. And you don't want to miss that. That's the bottom line. And if you try to be clever and you get out now because you think it might go down because rates may go up, you might miss something.
All of these billionaires have given us a blueprint to follow, a playbook for success. And guess what? It's super easy. Avoid panic selling. Have the patience to know that the recession will pass. Keep your eyes set on those long-term goals of retirement. Don't sell when stocks are going low, and be absurdly excited to buy into your favorite stocks that are now on a discount. If you're listening to YouTubers who constantly tell you they can predict the future and they know where the market is going, please stop watching these idiots immediately. And if YouTube is queuing up this nonsense to you, just go to these people's page, click the flag icon, and block them. And this will remove their nonsense from your life and clean up your YouTube feed. If you're drawn to this style of investing, a style that doesn't involve timing the market and instead is about consistently investing in a disciplined manner, then check out this video about dollar cost averaging into the market and how it can make you a gajillionaire. You know I love you, and I'll see you in the Everything Money community.